differently. Okay, we are going to discuss about this okay, after this. Okay, but before that, okay, why do you need to know? Uh, the public okay, needs to know okay, about money. Okay, why money is very important. Okay, is because okay, a lot of things right in our life it depends on money. It depends on loans. It depends on banks. It depends on money. A lot of things actually. If you look at what you have done so far, uh, probably is okay, your parents can look at okay, what your parents has done. They buy car, for example, okay, they need bank loans, right? They need loans okay, from the banks. If they want to buy a house, okay, for example, okay, they also need banks, right? They need bank loans. Okay, for some okay, young people, okay, when they want to get married, okay, they don't have enough money, okay, they go for personal loans, okay, for example, which is also money, okay, from economics point of view. So why money is important is because a lot of economic activities it depends on money. It depends on bank loans. So that is the reasons okay, why okay, you need to know okay, about the role of money okay, in the economy okay, because a lot of economic activities okay, depends on money. Firms, okay, for example, okay, they want to invest, okay, they want to expand, right? They also need money. Okay, they also need bank loans, right? So for economic students, okay, for our students okay, that take economics papers, okay, they need to know okay, about the role of money. Okay, but before that, okay, we need to define okay, what is money. Right. So money okay, from economics point of view okay, is defined okay, something okay, which is acceptable okay, as a means of payments. Right. So money okay, is any commodity okay, or tokens okay, that can be used okay, for as a means of payment. Means of payment scheme means money is served as methods to settle debt. Right? Hutang. If you have debts, for example, if you have bank loans, for example, you can settle the debts by using money. That is the main functions of money from economics point of view as a means of payments. Right? As a tools to make payments for the debt that you have. So on top of that, scheme money also have other types of functions, like medium of exchange, unit of accounts, and store of value. But the main functions of money is a means of payments, as a tools to make payments, as a tools to settle debt. But on top of that, scheme money also serve as a medium of exchange, right? Unit of accounts, store of value. Right. So what is medium of exchange? So in the past, when we don't have money, right? In the past, when we don't have money, we rely on barter systems. Barter systems is systems in which we exchange goods for goods. Right? Let's say you have a chicken and then you want to exchange with beef, for example. Right? So let's say there is no money in the economy. What you need to do is to find people with uh, right people with beef and then that want to exchange beef with chickens. Then you can exchange. Okay, you can decide the rate of exchange between chicken and beef. Okay, probably three chickens give you 1 kilo of beef. Okay, for example. That is barter systems. Okay? But with barter systems, okay, there are a lot of problems okay, because probably okay, you find someone okay, with beef, okay, for example, okay, but that guy okay, or that person okay, doesn't want to exchange okay, with chickens. Okay, he or she okay, want to exchange. Okay, let's say okay, with durians, okay, for example. So you need to keep on searching okay, to find okay, people okay, or persons okay, with beef and at the same time okay, he want to exchange okay, beef okay, with chickens. Right, so that's going to be time consuming, right? That's going to be tough, right? It's going to take sometimes probably okay, you won't be able okay, to settle it okay, within a day. Probably okay, it's going to take okay, a few days okay, for you to get beef, right, to be exchanged okay, with chickens. That is the problem okay, with barter systems. But with money, right, everything is easy. Trade is easy. If you want beef, for example, and then you have chickens, you just sell chickens for money, right? And then you take the money to buy beef, right? So it's gonna be easy. That is the functions of money as a medium of exchange. So money from economics point of view, right, can also facilitate exchange of goods in the markets, right? So they speed up the process. So unit of accounts give money, everything in the economy. I mean the value of goods and services in the economy can be expressed in terms of money, monetary value, USM value. Musang king, for example, is 30 ringgit per kilo, right? Beef, for example, is 30 ringgit per kilo, right? So prawns, tiger prawns, for example, 40 ringgit per kilo. Squid, for example, 45 ringgit per kilo. So everything can be expressed in terms of money when you have money. But without money, to value, right, goods and services is going to be tough, right? If you want to exchange, for example, chicken and beef, for example, without money, right, you need to think about the rate of exchange between chickens, and beef, for example. But with money, everything can be expressed in terms of monetary value, dollar value. Dollar value, then you can easily compare, right, the price of goods in the markets. And that is also is going to facilitate exchange between society, right? And then money can also serve as a store value. This is also important because when you don't have money, you need to keep, right, the wealth that you have in terms of goods that you produce. For some of the goods, they are perishable. Let's take farmers, for example, they produce vegetable, right? So if there is no money in the economy, so they need to keep wealth, they need to store value in terms of vegetable, but vegetables are perishable, right? So the value of vegetables will be gone in the next few days. If you keep wealth in terms of vegetable, then in the next few days, the value, the wealth that you have will be gone, right? So without money, it is tough. Actually, to store wealth, to store value. But with money, you can easily sell vegetables in the market, get the money, and then keep the wealth in terms of money, right? That is the functions of money as a store of value, right? So these are money from economics point of view, and then basically, right, what are the commodities or things in the economy that fits into these definitions? There are few. Right, first, of course, is the currencies that you have with you. That is the most liquid ones. That is the most important components of money in the economy. Not and coins that you have with you. Paper money, paper bills, and coins. Right, that is the first component. Second component is deposits with depository institutions. That is also money from economics point of view. Checking accounts, saving accounts that you have with bank, then time deposits or fixed deposits that you have with bank. Those are part of money, right? Because all those things can also serve the functions of money that we described earlier, as a medium of exchange, for example, right? Saving accounts, for example, you can use as a medium of exchange. Right now people are using debit cards, right, for the saving accounts that you have with the bank. If you need to pay for goods, you can easily swipe your cards, right? You don't have to go to bank. So it serves as a medium of exchange. Saving accounts, checking accounts is also easy, right? Checking accounts is accounts that comes with checkbook, right? If you open up checking accounts, they're gonna give you checkbooks. So whenever you need to pay, and then you just write check and then give to the person's that you want to pay. Right? That is also part of money. Checking accounts, time deposits. right? And many other types of deposits with depository institutions. Depository institutions are institutions like banks, right? That take deposits from the public, from firms, from household. The biggest are commercial bank, but on top of commercial banks, we also have other types of, depository institutions like Tabung Haji, right? And some other funds, that we keep our saving. Right. So these are money from economics point of view. So, but from legal point of view, this is only currency is the only money which is acceptable from legal point of view. But when it comes to economics, right, money includes not only currencies but also other types of deposits with depository institutions, saving accounts, and etc. Right. So this is money. Money classifications in economics. We classify money in two types. M1, M2. Right, we split all types of money that we have into these two categories. M1 consists of currency, right? This is money that you have with you, right, in your pockets, in your wallets, in your purse, right? So this is currency. Second is traveler's check, right? So this is commonly used by travelers when they want to travel abroad. So it used to be very popular, in 80s, in 70s, when we want to travel abroad, we're gonna buy this, from bank, right? And we bring this, for travels, whenever you need to pay, and then you just pay by using this. But you need to pay for this, right? And then checking accounts. This is the one that I mentioned earlier. Checking accounts is the accounts, right, that comes with checkbooks. If you have these accounts, you're gonna have checkbooks. So you're gonna use checkbooks to pay, and most companies they're gonna use this, right? But now online banking is getting more popular, so checking accounts is getting less popular. But in the past, normally businessmen they're gonna use this for making payments, checking accounts by individuals and also businesses. That is M1, right? So M2, right? This is less liquid as compared to M1. M1 they include right? So all these things are tools or commodities that can be used as a means of payments to settle debt. Right, in M2, so we also include M1. In M2, we have M1 plus some other deposits, time deposits, saving deposits, money market mutual funds, and other types of deposits. Time deposits is deposits that you keep for certain period of time. In US, it is known as time deposits, but in Malaysia, this is known as fixed deposits. Fixed deposits is deposits that you keep for 3 months, 6 months, 9 months. Right, it depends. Different banks they have different offerings for fixed deposits that comes with different interest rates. Saving deposits, this is a saving account. This is the most basic. I think all of you have this because right, that facilitates you to manage your money. You're gonna put in the your money bank, right? Or you can use this for scholarship purposes, right? You can also use this for parents, for your parents to transfer the money for overseas students, for example. Right, so their parents want to transfer the money, they can transfer into these basic accounts, known as saving accounts. Right, so money market mutual funds is a kind of just like unit trust, right? But in Malaysia, unit trust is more popular, but in US, mutual funds is more popular, but they are similar. There are some differences between these two. This is like ASB, ASNs, and also unit trust or mutual funds offered by some institutions like the bank, public banks, they offer different types of mutual funds or unit trust, right? And other deposits, right? So uh, if we look, okay, this is the case of US. Okay, if we look at the components of money that we have, right? So this is the biggest components. Okay, the biggest components is saving accounts. Okay, saving accounts, right? The most basic accounts. Okay, with banks, okay, with depository institutions. Okay, this is the biggest one. Right, and then we have a small components of money market mutual funds, right? Probably okay, this is the smallest one, right? Money market mutual funds, right? So on top of that, we also have time deposits, right? Time deposits. Okay, this is US. Okay, is about 700 billion, okay, US dollar. Okay, for the whole US, right? And then we have okay, checking accounts, right? And also okay, currencies and travelers check. So currency and travelers check plus checking accounts or checking deposits. Okay, and this is M1. Okay, this is part of M1. Okay, there are three things. Okay, currency and travelers check, right? And checking accounts. So the biggest components okay, for M1 okay, is checking accounts. And then okay, we have M2. Okay, M2 okay, consists of M1 okay, plus time deposits. Okay, the green here, right? The green color here, and then the orange colors, okay, which is the biggest components okay, of money, okay, which is saving deposits. And then okay, we have the smallest components, okay, which is unit trust okay, or money market mutual funds. Okay, unit trust okay, that invest in money markets. Right, so M1, M2, okay, all items okay, in M1 okay, are means of payment. So I mean, the traveler's checks, okay, the currencies, okay, and the checking accounts okay, are all tools okay, that can be used okay, as a means of payments. Okay, they are basically money okay, from economics point of view. But some of the items in the M2 okay, that we have, okay, they are basically not money okay, like time deposit, saving accounts, and money market mutual funds. Okay, they are basically not money, okay, but they are liquid assets. Right? You can easily convert time deposits, okay, saving deposits, and money market mutual funds okay, into money, and then okay, you can use okay, as a means of payments, okay, as a way okay, to settle that. Right? They are liquid assets, okay, time deposits, saving accounts, and then money market mutual funds. Right? The rest okay, that you have here, okay, checking accounts, okay, currency and travelers checks, okay, they are all money okay, because they are all can be used okay, to facilitate okay, payments okay, as a means of can be used okay, as a means of payments. Right, so deposits okay, are money okay, but check are not. Okay, the checks okay, that you write okay, is not money okay, but the money okay, that you have okay, the checking accounts okay, is money. Because okay, in business situations, sometimes okay, you write check okay, without having any money in the account. That happens. Okay, if your parents okay, are doing business, okay, you can ask them. Sometimes okay, buyers okay, they buy something okay, from you and then they pay okay, through check. But when you try to cash the checks okay, at bank, then suddenly okay, there is no money in the bank accounts. Right? So the amounts okay, that you put okay, on checks okay, is not money, right? But money okay, is the amount of money okay, that you have in the checking accounts okay, that you actually have in the banks. Right, so credit cards is not money, right? But credit cards is basically is a loan, right? Credit cards is basically instant loans that you can draw some money or you can use to make payments, but once you use it, right? So it becomes loans, then you need to pay. Okay? If you don't pay, okay, they're gonna charge you interest. Right? So credit cards is not money, okay, but credit cards is a type of loans. Instant loan, okay, risky, unsecured loan. Right. So this is not part of your syllabus, okay, but I think you need to know briefly okay, about this, depository institutions, okay, and then okay, the type of institutions okay, that they have in US. right? So depository institutions, just institutions that take money from us and use the money to make loans. That is the depository institutions. There are few, right? So in Malaysia, for example, we have commercial bank, but we don't have these, thrift institutions. But so on top of commercial banks, we also have, development banks. We have agriculture bank, right? In Malaysia, okay. But they behave, okay, like commercial banks, okay. But agriculture is very limited. Okay, they give loans, okay, for activities, okay, related to agriculture. Okay, they don't give loans, okay, to other things. Right, so thrift institutions is very similar to commercial bank, but the functions of thrift institutions is very basic. Right, they just take loans, they just take deposits from the public, and then they make loans. That's it. And sometimes the coverage for thrift institutions is very, very, very localized. I mean, they are not, they don't serve the whole nation, like bank, right? Commercial bank in Malaysia, CIMB Bank, for example, right? They have branches across all states, in Malaysia, but normally three, they are very localized. We don't have good example of this in Malaysia, but in US, because US is very big, some institutions they just focus on local, right, customers. I mean, let's say, they just focus in Bangi, or they just focus in Selangor, for example. Right? But we don't have that kind of institutions in Malaysia. But in US, they have many of these. They are small. I mean, in terms of operations, they don't have complicated tools, or financial instruments, like transferring the money, across borders, international monetary money transfer, for example. They don't have this. They don't have counters for forex, for example, like commercial banks. They are small in scale, right? So these are three institutions. There are many of these in US, but we don't have this in Malaysia. Money market mutual funds, which is part of money that you have earlier, that you have seen earlier. And this is just like ASB, ASN that we have in Malaysia, but I mean, in terms of operations, they're similar to that, but in terms of instruments that they invest in is very limited, because this type of unit trust, or this type of mutual funds, they just invest in money markets. They invest in instruments which is short term, like treasury bills, right? So they have many of these in US, but I think in Malaysia, this is we also have this, but I mean, in terms of coverage, our unit trust is not that extensive because compared to unit trust of mutual funds in US, right? This is huge markets in US, but not in Malaysia. But we have this in Malaysia, unit trust that invest in money. But this is not part of syllabus. Depository institutions, what they do is basically only two things. The basic functions of depository institutions. They take money from us. Right? We give them money. We deposit the money with depository institution, and they're gonna use the money to make loans. Right? Because they want to make profits. Right? Bank, they want to make profits. You put your money with them, they pay you 1%, but when they lend out, for example, they charge you 5%. So the difference between what they charge and what they give is profits to them. Right? So banks they try to maximize this. Bank in Malaysia, for example, if you look at some of the banks, they make billions of ringgits per year in profits. So bank in Malaysia is getting bigger and bigger. In Malaysia, okay, the biggest bank, Maybank, probably okay, they make around 4 billions. But in US, okay, the banks okay, is even bigger. They make trillions okay, per year, right? In US, right? You just make billions. Okay? Some banks in US okay, they make trillions okay, of dollars okay, per year. Right? Loan generate profits. Okay? But you know at the same time, okay, they need to strike a balance okay, between making money and prudence. Okay? Prudence means because you keep the money okay, with bank, okay? But from time to time, okay, you need the money, right? You are going to withdraw the money okay, for your consumptions, okay, for your spendings, right? So if you put the money okay, with bank cannot lend out all okay, because from time to time okay, you are going to get your money okay, from bank okay, to spend. So bank needs to strike a balance okay, because the more they make, I mean in terms of loans, okay, the more loans okay, that they make, okay, the more profits okay, that they're gonna make. But they cannot lend out all okay, because from time to time okay, depositors okay, is going to withdraw the money, right? You put the money okay, you get the money for example okay, from PTPTN okay, for student loans, right? You put the money okay, in bank, then okay, from time to time okay, you are going to take that money okay, to pay tuition fees okay, to buy new phones okay, to buy foods, right? To buy shirts, right? But you take it, gradually. Okay? You're not gonna keep okay, all in terms of cash okay, with you. Okay? You're gonna put the rest in bank. Okay? You just take okay, whatever you need, right? Because you have bank cards. So bank need to decide okay, on how much okay, to lend out, and there are laws or regulations okay, set okay, by the central banks okay, on this. The minimum okay, that the bank okay, needs to keep okay, to meet these withdrawal demands okay, by the depositors. Right. So as I said, okay, the depository institutions okay, is not part of your syllabus, okay, but I just discuss okay, briefly okay, with you, okay, so that you get some ideas okay, about depository institutions and the types of depository institutions. Okay. Now, okay, is Federal Reserve. Okay, Federal Reserve is a central bank, right, for America. Okay, for United States. What is central bank? Central bank is the authority or public authorities that regulates all depository institutions. Okay? They are just like policemen, right, for the banking institutions. Okay? Or all depository institutions okay, or banking institutions okay, they are subject to rules and regulations okay, set okay, by the central bank. So central banks okay, will control, right? Banking activities, okay? Borrowing, lending in the markets are controlled okay, by the central bank, right? So central bank is going to issue okay, the license okay, for banking activities. Okay? If you want to set up okay, a new bank, then you need to get a license okay, from the central bank, right? So central bank is just like regulators okay, for the banking industries okay, or banking institutions. Right, in Malaysia, central bank is known as a Bank Negara Malaysia. Okay, in US, okay, it is known as a Federal Reserve Bank. The short form okay, is FED, okay, FED. Right, it's not FET. Okay, FET to lain. Right, Fed. Okay, Fed means Federal Reserve Bank okay, of the United States. In Malaysia, BNM. Okay, Bank Negara Malaysia. So a central bank they have few goals, okay, and these are some of the examples okay, of goals okay, that they try to achieve, okay, to manage inflation. Okay, for example, right in the case of Malaysia, okay, this is one of the main focus okay, for Malaysian central bank. Okay, they want to make sure that okay, the inflation rate okay, is acceptable. Now it's 4%, 4% is still okay, but relatively 4% is higher. Okay, inflation Malaysia now, right, is higher as compared to the past. Right, in the past inflation was lower. Now 4% is slightly higher, but I would say that 4% is still acceptable for Malaysia. US they have all close to 9% inflation. right? Turkey, for example, they have 60-70% now, right? Which is a lot higher as compared to Malaysia. Okay? But in all countries, right, inflation is increasing now. Right, maintain full employment. Keep full employment means that they try to to make sure that the labor in the economies are fully employed, right? So they try to minimize the unemployment rates in the economy. That is what responsibilities of the central bank. Right, moderate the business cycle. Business cycle means up and down in economic activities. Right, when economy is moving too fast, probably the central bank is right will try to reduce the pace of economic expansion. When the economy is too weak, when we have recessions, for example, so central bank is going to try to bring out, right, to bring us out from recessions, right, and all these things were directed towards this achieving a long run economic growth. For all countries, the ultimate objective is to grow. To grow means we produce more, we more productions, the income is high. So this is the main objective for all countries. They want to grow the economy, but to grow the economy, there are a lot of things that they need to address. Other secondary uh, objective like maintaining acceptable level of inflation, right? Maintain full employment, moderate the business cycle. But ultimately, right, the main objective of all banks is to promote long-term economic growth. Right. So to address this, the focus on this, I think probably some of you have heard about OPR, right? OPR in Malaysia is increasing. Right, so similar rates in US is known as a federal fund rates. Right, in Malaysia, it is known as a OPR, overnight policy rates. Go and check on this. Right, so this is the terms that we use in Malaysia, overnight policy rates. In US, federal fund rates. Right, so before I forget to inform you, so I plan to give you second test next week, right, at 5 p.m. Hello.
On Wednesday, sir.
Sorry?
On Wednesday ke?
Aha. During the class times, 5 p.m. Or you want to do it at night, we can do it at 8, for example, if you want to do it at night.
I think we can do during the class lah.
All right. So 5 p.m. Next week. So look at the syllabus. Look at the syllabus. So we are going to cover whatever we have done. I don't remember exactly the coverage for first test. So we are going to start the chapters after the last topic, right? That we include in the first test. Right? So you just check, right, the syllabus. That's our coverage for second test.
Doctor, do we need to attend the class during the exam?
Nah, it's gonna be online.
Oh, gone you.
Because some of you is going for Chinese New Year, and the last class next week is also online, but not this week. Okay? On Friday we're gonna have face to face, but next week all online because some are leaving for Chinese New Year. Is that okay?
Okay, doctor. Doctor, may I know how many questions in the exam?
I'm not sure yet. Okay, probably 30, 35. Okay, just like first test.
Okay.
All right. All right. So this is the structures. I'm not going to explain this because this is not the structures that we have in Malaysia. Right. we have different kind of structures because in US the central banks they have many branches in US. I think they have 11, I think 11 or 12. Okay, and regional central banks. I mean, you know, each of the branches they focus on regional issues. Okay, let me check whether they have the right. So these are the branches for central banks in US. They have one in one in San Francisco. Right, they have in Dallas, Atlanta, right, St. Louis, Chicago, Mini. Right. So these are the branches. Okay, 12. Okay, 12 regions. Okay, they split into 12 regions. Right. So for example, okay, these ones okay, in Kansas, number 10, okay, branch number 10 cover this, you know, orange area, right? So the one in Dallas okay, cover this, right? In fact, they cover okay, half of these states, right? They are not, you know, organized okay, according to states, okay, but they organize okay, according to regions. Okay? Some states okay, they have, right? They fall, you know, these sections okay, for these states. I don't remember exactly to what states this. Right, they split into two. Right, this section okay, belongs to this. This section okay, belongs to, you know, the one in Orlando, okay, Atlanta. Right, so Federal Reserve Bank, their branches for Malaysia. Okay, we have branches, okay, but we still right depends okay, on the ones okay, on the policies okay, decided okay, by the headquarters okay, in KL. Here I think we have one in Penang, we have one in Terengganu, we have one in Johor, I think, and also one in Sarawak, right, in Kuching. Don't actually know okay, whether we have a branch in Sabah or not. So you can check. Right, but those are the branches okay, of Nation Central Bank in Malaysia. Right, so and also okay for the central bank they're gonna have this okay they're gonna have the committees okay, that decides okay, on Fed fund rates, right? In US okay, it is known as, you know, Federal Open Market Committee. In Malaysia okay, this is known as a Monetary Policy Committee, right? Monetary Policy Committee okay, they have I don't remember exactly. I think they have few representatives from the central bank and 2 representatives from outside. Normally, there'll be one representative in this committee from the academia. I mean, from the academic institutions. In the past, it was, you know, Tan Sri Azlan from UKM. We also have, you know, Prof. Lim Kiah. I don't remember the full names from somewhere, right? So normally they're gonna have one from the industry and one from academic institutions as a part of this. For Malaysia, not for US. The rest are people, you know, from the central bank. So these are the committees that meets. Right, in US they meet, you know, I think 8 times per year, 8 times, I think 8 or 9 times per year. In Malaysia 6 times. They meet every two months. But in US they meet every 6 weeks. Right, so these are the committees that will decide on monetary policies that will decide on the best interest rates for the country. So these are the committees that decide on for the case of US, right? These are the committees that decide on these rates, you know, these Fed fund rates. Right? In Asia, these are the committees that decide on this because this is similar to this. In Asia, it is known as overnight policy rates. In US, it is known as federal fund rates. So this is the mother of all interest rates. If this change, right, all interest rates in the economies will change. Right? So this is the rates which is set by the central bank. right? If they want to change the interest rates in the economy, the interest rates on housing loans, on car loans, on personal loans, they're going to change this. If they change this, all interest rates in the economy will change, right? All interest rates in the economy follows this, right? Fed fund rates in US or overnight policy rates in Asia, and the committees that decide on this is Monetary Policy Committee. Right? In Malaysia, in US, it is known as Federal Open Market Committee. Right? So these are the group of people that decide on the interest rates set by the central banks. Right. So these are the structures actually, for because you need to know about monetary base. To understand the role of money in the economy, you need to know about the monetary base, because money, the amount of money that we have right in the economy, it depends on monetary base. If we have more monetary base, then we're going to have more money in the economy. Right? If there is reduction in monetary base, and then money in the economy is going to reduce. Right? Money, I mean M1, M2 that we have seen earlier. It depends on this. It depends on monetary base, right? So what is monetary base? Monetary base is basically this, right? This is the balance sheets, right? Balance sheets for the central bank. This is assets, right? On the left hand side are assets, on the right hand side are liability of the central bank. So assets consists of government securities, like bonds issued by the governments, and this is the biggest components. So on top of that, you also have loans to depository institutions. This is loans given by central bank to other financial institutions, depository institutions like commercial banks. Because the structures of the systems that we have, if bank they don't have enough money, they can borrow actually from other banks. But on top of borrowing from other banks, banks can also borrow money from the central bank. Right? If central bank give loans to other financial institutions, that money will be reflected here. Loan to depository institutions. Right? Currency. This is the amount of currency circulated in the economy. This is the currencies that we have with us. Right, in your pockets, in your wallets, in your purse, right? For the whole countries, for the whole countries, right? So we just talk a lot, and then we're gonna get this, and that appears as currencies on the central bank's balance sheets. This is reserve deposits reserve of depository institutions. The nature of systems that we have, right? The banking systems that we have, bank they have to keep a certain amount of money with central bank, right? We deposit the money with a commercial bank or depository institution, and depository institutions they are required by law, right, to keep certain amount of money as reserve with central bank. They cannot use this. Right? They cannot use this. They have to keep a certain amount. Right? The amounts depends on rate. Right? Reserve rate set by the central bank, and the amount of money that they take from the public. Let's say the reserve ratio or reserve rate set by the central bank is 10%. If they take the deposits from the public worth 100 millions. Right, 100 millions, the total deposits that we bank. So it means that 10% of that 100 millions must be kept with central bank, right? Which equal to 10 millions. 10% of 100 millions must be kept with central bank. So that amount of money is going to appear under this category, reserve with depository institutions. Right, so the amount of this, you total up, all the liabilities for the central bank, you're gonna have some value. Okay? In this example, okay, this is 3.6 trillions, right? 2.6 trillions, okay, for both sides, and this is known as a monetary base, right? Because asset okay, must always equals liability, right? So the amounts that you're gonna get here okay, will be the same as the amounts that you're gonna get here, right? For the asset, assets is always equals to liabilities plus equity for the balance sheets, right? So in this example, the monetary base in US is 2.6 trillions, and this is monetary base, and this is the amount of money that will determine the amount of money that we're gonna have in the economy, right? It's gonna be more than this, but these are the limits, right? There are some formula to compute the amount of money that will be available in the economy, but the amounts depends on this. If positive relations between the amount of money that we have in the economy and the monetary base. If you have more of this, right, so the amount of money in the economy is going to be more. If this is reduced, then the amount of money in the economy will be reduced. So it depends on this, right? Monetary base. Right, so I think I stop here. So on Friday, we are going to try to get this topic done by Fridays, and then if we have time, we're gonna get into new topics on Friday, which is the last topic on monetary policy, fiscal policy, and also supply side policy.
Doctor, okay, I know that our final exam is right in the essay form or multiple choice.
Both, some multiple choice, some essay.
Oh, okay. Thank you, Doctor.
So for final exams, it's gonna be face to face. You need to come. This is the rules, or the types of exams decided by the top management of SPE. Actually, first and second test should also be face to face, but don't tell them that we have online exam. Right, many classes they are going for face to face exam, even for first test and second test. All right, so I give you opportunity to right for first test, second test, right, to perform better. But for final exams, we have to follow them because the questions for final exams are standardized across groups. We have 7 groups, I think. So you're gonna have the same questions, right, for all students for principle of economics.